I want to bring in our next guest, Dixon Doll. He's the co-founder of DCM, was an early investor in Clearwire. That is one of the biggest critics out there of this AT&T deal for T-Mobile. Dixon currently manages about $2 billion in venture capital, including investments in all corners of technology, including Chinese internet companies. John and Dom here with me as well, because we're all interested in these topics. Dixon, first off, on Clearwire, you were an early investor. You heard the CEO, John Stanton, recently coming out and saying, look, this is bad for competition. What are your thoughts on this?
I think Clearwire is in a difficult situation right now because they're a public company and they're controlled by Sprint, and they have had some difficulties raising new amounts of capital. So I think some kind of a partnership or a merger has got to be in the cards going forward here. It's not clear which one it's going to be. Between
Clearwire and Sprint?
Clearwire and Sprint or somebody else, it's probably not one of the majors.
Not one of the majors.
Yes.
Does Sprint have to do something bigger than that, though? I mean, it feels like the attack plan so far has to be critical of this deal, which could work. I mean, if they're overly critical and play into that, then maybe they can derail this deal between AT&T and T-Mobile. But are investors going to be satisfied with that?
I absolutely think the AT&T T-Mobile deal will ultimately happen. There will be a lot of concessions and commitments by AT&T to maybe to sell back subscribers, just like what happened with the Verizon situation a few years ago. But eventually, it's going to be good for the AT&T shareholders and good for the country. But the offset is going to be we need some more competition in here, and companies like LightSquared and Clearwire have been trying to provide that competitive dynamic.
Hey, Dixon, one of the things that a lot of people talk about, I've talked to traders and analysts who say that, it used to be about WiMAX versus LTE, these two competing technologies. Now it's just about the spectrum. So you talk about these concessions. One of the concessions might have to be they have to give up some of the frequencies they use, the pipes, so to speak. Do you think that that's really an issue? Is Clearwire not necessarily a big loser in this whole thing if this happens because they have the spectrum?
Clearwire's biggest asset is its spectrum. There's no doubt about that, and that's one of the things that AT&T needed to get by virtue of its T-Mobile acquisition. So capacity, and capacity are the key issues for all the mobile internet companies going forward.
So it sounds like then, in a way, Randy Stevenson was right then, and that this particular deal is going to spur, perhaps accelerate things in the telecoms business that weren't going to be accelerated before, weren't going to happen.
I think that's absolutely correct, but the only way innovation will truly prevail in telecom is if we can have another competitive dynamic bubbling up from the bottom, and I think Sprint might well play a part in that.
What about the tower companies? They all got slammed. The stocks got slammed on this news because, maybe AT&T doesn't have to use as many towers as the towers that we're using. Is that a buying opportunity for somebody like you? Do you look at that business and say, actually, I think the investors are wrong who are selling the stocks?
I think you have to go in and look at it on a case-by-case basis. Some of the tower companies have actually done well since it was announced, and some have been hit, True. Like you mentioned. So it's situation specific and location, part of the country specific as well.
Dixon, let me just change gears a little bit because you raised, I think, $500 million last year, in your funds, obviously, to invest in some Chinese companies that are listing here. We're seeing one, in fact, actually today list. Are you even more bullish on these Chinese companies? Because there's a lot of skepticism now about how financially sound they really are.
I'm very bullish on Chinese companies. We were the first firm in Silicon Valley to invest in China 11 years ago. We've had 7 IPOs there so far, and the aftermarket performance has been well over 100%. And I think there's going to be another wave of very solid Chinese companies going public this year. We should also note that they were responsible for 1/3 of the IPOs in the U.S. last year.
Out of that $430 million you raised last year, how much have you put into these Chinese companies?
We have not actually invested more than 10 or 15% in total, and about half of that's gone into the Chinese companies.
Half of that, okay.
Yeah.
What about for this year? What's your goal?
It'll be about the same. Our target is 50% in Asia, with the vast majority of that in China, and the rest of it in the innovative companies that we find in the U.S.
And I was looking at just some of the ones, BitAuto and Dangdang were two that you invested in, but there have been, of course, several others that have listed. How do you choose one over the other? What's the difference for you?
Well, we look for companies that have extremely strong managements and that are in an area that's being fueled by the growth of the middle class consumer in China. E-commerce is a particularly important and exciting area for us right now. And there'll be a number more of these companies going public, I think, in the next year or two.
And Dixon, you're making these investments. First of all, the big foundation to this is confidence in the numbers, right? There is business to be done in China, but are you confident enough in what these companies are doing and reporting to make you want to invest there?
Well, it goes back to picking the management teams, because if you pick the right management teams, they all understand the importance of dealing with auditors that are internationally and globally recognized. And so we try to stay out of we don't like to go off the beaten path. Mm-hmm. And I think most people, the institutional investors that follow China, are very comfortable investing in these companies if the proper governance and management team factors are in their favor.
But that's exactly the subject. I think a few weeks ago, the FT had written this Lex column about these Chinese companies. And I just want to bring up one thing that they said about this, which I thought was really interesting, which is beware companies that are listed via reverse merger. Watch out. The fact that 106 of the 188 Chinese companies that are listed on the NASDAQ made no public offering of securities means that they have basically bypassed the scrutiny that process entails. So 106 out of the 188. It's a warrant. I mean, there's all this speculation or that these companies, are falsifying data, or at least not, transparent enough.
I don't know really very much about those kinds of companies, because we don't do that particularly. We like to invest in a company in the early stage and then grow it and build it and take it public when the time is right. So I don't feel qualified to. I personally, as an institutional, just as a retail investor, I would probably be very cautious about those.
Very, very quickly before you go, you said there are going to be more IPOs coming. When is the time going to come when they feel like they don't have to list in the U.S.? Because right now, they list in the U.S. in part because that's the place to list. When's that going to change?
It's starting to change right now. DCM had our first company in our portfolio go public on the Chinese exchange just about 3 weeks ago, a company called Luxin. The Chinese government has made a massive investment in getting ready to have their version of the NASDAQ and the New York Stock Exchange. And one of them is called Chinext, and the other one is the Small Medium Board. And they're going to progressively get more and more sophisticated over the next few years. 5 years from now, I think they'll be in great shape. Any company in China can go public in either place, U.S. or China.
Okay. Dixon, great to see you again.
Thank you.